Good morning, everybody. We're back to our regularly scheduled program. This is Dennis, and this is Wednesday, the 19th of March, and we're going over what the distributions are for YieldMax ETF as well as Roundhill ETF. So, without further notice, let's go ahead and get straight into it. By the way, YieldMax hasn't even posted it on Twitter. We're that early into it that YieldMax hasn't even posted. So, let's go ahead and review on how we did this week from YieldMax ETFs. So, starting with GPTY. GPTY is a weekly payer, of course, and that one is paying us $26.40 per share with a distribution rate of 33.6 and a return of capital of 0%. We also have LFGY. LFGY is paying us $47.23 with a 66.79 distribution rate and a 53.27 return on capital. We have QDTY paying $31.24. No distribution rate announced, no SEC daily yet, and a 47.65% yield on that, our return on capital. RDTY is $31.93 at 0% return on capital. We have SDTY, $31.75 with 100% return on capital. ULTY, of course, ULTY is now a weekly payer, and it's going to be paying weekly from now on, paying a measly $9.77 or 9 cents and 77, 0.0977. So kind of low, but of course, it's the percentage is high at 79.43 because the price of ULTY is down, and that's a return on capital of 100%. We have YMAG paying $8.50 or 8 cents and a couple of shekels on the side, and that distribution rate is 29.48% and the return on capital of 24.87. Then we have YMAX paying $15.26, distribution rate of 57.05%, still pretty high and dandy and good at 57.5% or 0.05%. Return of capital 43.60%. Now that we're out of the weeklies, we went over all of these weeklies because now YieldMax has so many weeklies. Let's go ahead and look at the monthly payers. So we have Crash, reverse of Tesla or reverse of TSLY, and that one paid $64.58 at 100% distribution rate and a 98% return on capital. We have Fiat, their Dorsey rate funds, and 5e as well that pay with TSLYs with Group A distributions, and that is $69.25 from Fiat at a 25.57% distribution and a 0% return on capital. We have 5e at $70.92. And that is also 0% return on capital and a 25.90% distribution rate. We have GUI, which is one of the funds we own. We have GUI that paid $32.84, so continuing to stay above the 30-cent mark and at 33.98% and a 0% return on capital. We have OARC, $32.10, 51.6 and a 71.26% return on capital. We have Snowy at $81.19, 63.58% distribution and a 0% return on capital. Of course, we have TSLY, the OG from YieldMax ETF, and the one I'd hold myself, coming in low again for this month at $46.38. So lower and lower we go. But of course, so does the value or the NAV of TSLY, due to Tesla dropping dramatically in the past couple of weeks, due to all the things going on in the market. And 76.84% distribution rate at 94.16% return on capital. Of course, we have TSMY coming in third to last, 57.72, 47.98% distribution rate, 93% return on capital. Zomo, 29.50, 26%, 26.06%. Distribution, and 77.73% return on capital. And finally, YBIT at 43.57, 56.11% distribution rate, and 97.70% return on capital. So, just looking at this chart, we can see that Fiat and 5e are actually doing pretty well. 25.25. I don't know how the NAVs are doing. I haven't been looking at the NAVs for Fiat and 5e, but they're doing quite well with a return of capital of 0% for both of them. Crash did quite well, of course, probably with NAV as well because Tesla went down. And YMAX continues to deliver above the 10-cent mark, but it has been dipping lower and lower. And I do wish it could go back up to the 20-cent mark and stay steady at that. But that, of course, has to do to its underlyings, which is all of its YieldMax monthly payers. So it's going to be quite hard for YMAX to do that, but at least it's better than YMAG at 0.0850 and better than ULTY at 0.0977. But let's go ahead and take a look at our chart and what does that mean for us or for my portfolio. So we didn't add that many shares into TSLY. We only added 8 shares into it, and we're at 469 shares, 0.7143. And we got that 46 point, oh wait, right, where is it? That 4.4638 distribution, and that got us $217.85. So in total so far for the year, we're at $807.84. And of course, as you can see, those distributions are dropping down, 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 and down. We had 0.7170 in the beginning of the year, then 0.5793, and we continue to drop lower and lower. But if we take a look at last year, this is not our lowest distribution. Our lowest distribution was 40.46, but of course this was before reverse split. So technically this was 80 on the 648. If you reverse that to 324, then it would have been 80. So if we look, I think this is our lowest distribution we've ever received from TSLY. So 46.38, lowest distribution we received from TSLY. If we did post reverse split, it would be around 23 cents. So quite sad to see from TSLY, but hopefully it's due to the market drop in Tesla, the underlying, and they're able to bring it back up once Tesla goes back up. But let's go ahead and take a look at GUI as well. GUI at 334.9993 shares, and that paid us $32.84 for $110, or a total of $347.92 for 2025. And of course, we are higher than the month before. Of course, we also added 10 shares on top of that. So higher than January of 108.03, but lower than February of 129.88. And I'm pretty sure I didn't do a video on my Aptly distribution and AMZ distribution because I was away on my trip. But for AMZ, we're at $132.20 from our distribution last week, and at $432.40 total. We got that $41.77 on our 316. We also have Aptly at $104.26 at $297.96 for the year, and $344 on our 303 shares for last week. But besides that, we also have YMAX, and YMAX paid us that $15.26 per share, and we still have 616 shares. We didn't add any up from last week. I'm pretty sure I added into QDTY and some other funds, but we didn't add into YMAX. So we're still at 616 shares, 1526 on that distribution, and that gave us 94.11. So we're at $303 for the month, and that is getting close to last month, February, of $386.25. So if we're able to get, let's see, if we're able to get another 20-cent distribution, right? Yeah, I think we need to get another 20-cent distribution for us to be, actually, no, we don't even need a 20-cent distribution. If we round it to like 50, all we really need is just a 17-cent distribution, and we'll be higher than last month. Actually, it might be even higher than last month without the 17-cent distribution, because we did increase our shares count as well. So with YMAX, we should be higher than last month, assuming that we don't get another 10-cent distribution, and we get a little bit high, maybe at 15, or maybe even at let's say, I don't know, 10-cent distribution. Actually, no, we need a 15 so we could beat it. If we could get another $94, assuming we don't add shares, then we'll beat last month's by just a little bit. But YMAX still coming in strong, still paying us, still somewhat increasing month over month. As you can see, $300 to $386 to hopefully this month we get close to that $400 mark. But of course, we've been adding shares aggressively. YMAX has been dropping as well in value, but that's of course to all its underlyings, the single stock trading ETFs that YMAX or YieldMax has have been dropping as well. But I do believe that this will have probably more stability than the single stock ETFs. as well as stability in his dividends and stability in his value, and as well as the possibility to grow maybe faster than the overall funds, the single stock funds. So, but that we'll have to see. Let's go ahead and move on to Roundhill. Roundhill actually did post on Twitter at 7:02 a.m. Let's see, did YieldMax post yet? I'm curious. What's going on? Why are they not posting? They did not post. Very interesting. They haven't posted yet, but it's fine. We still have the numbers on their article. So XDTY paid $32.49 and 70. $32.49 per share. So pretty high payment compared to last week. And then of course QDTY paid $27.72. Also a very high payment compared to last week. And RDTY at $32.66. Coming in at $32.66. Of course, I only own QDT, but it's pretty impressive seeing XDT paying such high amounts, especially with the S&P technically usually having lower volatility than QDT, so therefore premiums are usually lower. But I assume because of the market downturn, there's high volatility, and they're able to gain from that with their calls. But then we also have YBTC coming in at $56.36, so also paying a good amount. And of course, Bitcoin has struggled recently, as the whole market has really. So 56.36 is pretty good to see, especially if you're someone who owns this and are reinvesting back into YBTC. You're able to buy your shares for cheaper now that the market is going down a little bit. So yeah, that is our Roundhill distributions. And how does that affect my account? Well, I have 239.4295 shares of QDTE. As you can see, QDTE. And that paid me that $27.72 or $66.37. And that was a 21.21% increase from last week, which that week before was a 54.62% increase from the week prior. Now we take a look at this one. This one's going to be a little bit more tough to beat. The first week of 1514 did kind of hurt us when it comes to beating next month's. Unless we add a lot more shares into our QDT, which is going to be harder to do because QDT, well, it's cheaper now, but it's a little bit more expensive than YMAX. It's triple the price of YMAX. So adding shares into QDT is expensive. As you can see, last month we ended at 232 shares. We're sitting at 239. Even if we get it to like 245 shares and we get another 23 distribution, I doubt we'll be able to beat next or last month. Yeah, I don't know if we'll beat next month or last month's payment. If we get a 23.31, we get a 50 and it'll be close. We'll probably need to get another like 25 cent or 27-cent payment to beat next month's payment, next month's return. And especially the month prior, January. So as you can see, we've been declining in overall monthly distributions, but of course, January, we did have 5 weeks of distributions, technically. So this is kind of biased with the 230. But the 227 and 156, if we're able to boost it up, that'd be great to see. But it's been tough. It's been tough. There's nothing you could really do. The markets have been really tough. As you saw with TSLY's distribution. TSLY is down completely to its lowest at 46.38. We hope they can recover from there. At this point, I'm getting close to playing on house money anyways. By May, I should be running on house money. So I'm not really bothered by it. We're at $807 and $4,305. So we're around $5,000 somewhat in distributions received from TSLY. At this point, I already received everything I'm pretty sure I put in. I did not put more than $5,000, I believe, into TSLY. I didn't track how much I put in, so I can't give you a exact estimate, but I'm pretty sure I've already returned. By May, I should have returned house money, especially if we get maybe another $200, $300 distribution somehow, then we'll probably be over that house money return, because there's no way I put close to $10,000 in TSLY. I know for a fact. But yeah, so we're coming close to house money on TSLY, even with a market downturn being a little bit tough on these funds. But I do believe that with these distributions, currently the way I'm trading is I'm buying into other funds like JEPQ and SPYI, also saving cash on the sideline to buy some contracts into the S&P. So I can continue to trade 4-man covered calls and increase my income every 3 months by $400. assuming that I'm able to continue that income. And we're also getting close to that as well. We only have a month and a half left until we're probably going to be able to purchase another contract on the S&P, and therefore increase our income by $400, and therefore increase how much we're able to reinvest back into the portfolio and the speed at which we increase. So hopefully that all goes well. Hopefully these funds continue to stay solid. AMZ honestly stays solid. Aptly stays solid. As you can see, Aptly is above the three-digit number, above the $100. AMZ continues to stay above $100 even with the lower distributions. We're still staying above $100 with AMZ. GUI staying solid at above $100. AMD is okay. AMD is still that position I kind of went into too early. I still do believe that underlying AMD might go up, especially after this market downturn ends. And of course, YMAX is YMAX. It's just a diversified YieldMax ETF fund. But as you can see at the end, we can see our total earned for the month. And March might be the first month that we come in lower for 2025 than the previous month. As you can see, we're currently at 626. If our distributions for YMAX come in as estimated at around 390, hopefully if we're able to beat it, 390, 400, even if we come in at 400, we're still going to be below last month's distributions. So it's going to be quite disappointing for this month. Well, it's not going to be that low. It's probably going to be like negative 2-3% compared to last month. But yeah, it's going to be a little bit low compared to last month. But hopefully we're able to change that in April if the market decides to come back up. So yeah, that has been me. That has been the distributions from YieldMax ETFs as well as Roundhill. Quite decent distributions depending on what funds you hold. TSLY, of course, not that great. GUI coming in strong as usual. And of course, all their weekly ETFs have been doing fine. LFGY, GDTY have been dropping little by little by little. But those, of course, are plays on crypto and AI and the tech space. So, but their QDTY, RDTY, SDTY actually have been doing quite well. As you can see, RDTY is 0% return on capital. And compared to, of course, Roundhill ETFs, they are lower on distribution, except the QDTY at 31.24. But it'll be interesting to see the comparison with NAV and NAV distributions and everything included to that. So, all right, that has been me. We are back to our usual schedule with post Wednesdays and Fridays. And I'll see you guys on Friday for Friday's post. Goodbye.